Welcome to Smart Wealth Education. Investing in precious metals, such as gold, silver, platinum, and palladium, is a popular option for investors looking to diversify their portfolios and protect their wealth. Here are some key points to consider when investing in precious metals. Portfolio diversification. Precious metals are often considered a safe haven investment and a hedge against economic uncertainty. They have historically exhibited low or negative correlations with other asset classes, such as stocks and bonds. Adding precious metals to a diversified portfolio can help reduce overall risk and potentially offset losses during market downturns. Store of value. Precious metals have been recognized as a store of value for centuries. They are tangible assets with inherent worth, and their value is not directly tied to any particular currency. In times of inflation or currency devaluation, precious metals can retain their value and provide a form of protection against purchasing power erosion. Supply and demand dynamics. The supply and demand dynamics of precious metals can impact their prices. Factors such as mining production, central bank reserves, industrial demand, and investor sentiment can influence the availability and price of these metals. It's important to monitor these factors to make informed investment decisions. Different investment vehicles. There are various ways to invest in precious metals, including physical ownership, ETFs, exchange-traded funds, mining stocks, futures contracts, and options. Physical ownership involves buying and holding physical bullion or coins, while ETFs allow investors to gain exposure to the price movements of precious metals without directly owning them. Mining stocks provide indirect exposure to precious metals through shares of mining companies, which can be influenced by factors beyond metal prices. Risks and considerations. Like any investment, investing in precious metals carries risks. Precious metal prices can be volatile, and market fluctuations can impact their value. Additionally, storage and insurance costs should be considered for physical ownership. It's essential to conduct thorough research, set realistic investment goals, and understand the risks associated with investing in precious metals. Market timing. Precious metals, like other commodities, can experience cyclical price movements. Attempting to time the market and predict short-term price fluctuations can be challenging. Long-term investors in precious metals often focus on the fundamental factors driving demand and supply rather than short-term price movements. How to invest in gold, silver, and other precious metals. Investing in gold, silver, and other precious metals can be done through various methods. Here are some common ways to invest in these metals. Physical ownership. This involves buying and holding physical gold, silver, or other precious metals in the form of bullion bars, coins, or jewelry. You can purchase them from reputable dealers or even directly from government mints. Physical ownership provides you with tangible assets that you can store securely. However, consider the costs of storage, insurance, and potential liquidity issues when opting for physical ownership. Exchange-traded funds, ETFs. Precious metal ETFs are investment funds listed on stock exchanges that aim to track the price movements of specific metals. These ETFs hold physical bullion or use derivative contracts to replicate the metal's performance. Investing in ETFs provides an opportunity to gain exposure to precious metals without the need for physical ownership. It offers liquidity and convenience, as the ETF shares can be easily bought and sold on the stock market. Mining stocks. Another way to invest in precious metals is through mining company stocks. By purchasing shares of mining companies, you gain exposure to the potential profits and risks associated with their operations. Mining stocks can provide leverage to the price movements of metals, but they are also influenced by factors beyond metal prices, such as production costs, management effectiveness, and geopolitical risks. Futures and options. Sophisticated investors can engage in futures and options contracts on precious metals. These derivative instruments allow investors to speculate on the future price of metals without owning the physical assets. However, futures and options trading can be complex and involve higher risks, so it is advisable for inexperienced investors to thoroughly understand these instruments before engaging in such trading. Precious metals IRAs. Some companies offer individual retirement accounts, IRAs, specifically for precious metals. With a precious metals IRA, you can allocate a portion of your retirement savings to physical gold, silver, or other metals that are held in a custodial account. Precious metals IRAs provide potential tax advantages and a long-term investment option for those seeking to include precious metals in their retirement portfolios. Before investing in precious metals, it is essential to conduct thorough research, understand the risks involved, and consider your investment goals, time horizon, and risk tolerance. Consulting with a financial advisor who specializes in precious metals can provide valuable guidance based on your specific circumstances. Additionally, keep yourself updated on market trends, supply and demand dynamics, and geopolitical factors that may affect precious metal prices. It's recommended to consult with a financial advisor or do your own research before making any investment decisions. Each investor's financial situation and risk tolerance may vary, so it's important to align your investment strategy with your specific goals and circumstances. Thanks for watching. Like, subscribe and share.